Welcome, everybody, to our Long Verticals and Diagonals webcast. I'm Connie Hill. Happy to have you joining me here today, and I'm happy to be back. I know I missed like 3 weeks in a row. Really appreciate Barb Armstrong stepping in and teaching the class for me. Hope you enjoyed a little trade-off. Sometimes it's nice to have another coach's viewpoint, how they might do things. So I'm happy that she did that for me, and glad to see that you're here. I hope that you're following me on X. I'm Connie Hill CS. And I'll post educational content throughout the trading week and sometimes a few things on the weekends. I am joined in the chat by 40, 50 plus year veteran of the markets, Ben Watson. You guys all know Ben. Happy that he's here today. Of course, he knows these strategies inside and out. So as you have questions, go ahead and ask. All right. We are happy to field questions. I'll keep an eye on the chat. Ben will as well. You might have to get to some of the things I can't quite get to, but we want you to get your questions answered. If you're somebody that listens to this on the recorded version, you can get your questions answered too. Just go ahead, chat in whatever your question is to the commentary that you're able to leave a message on YouTube, and I go back and review those so you get your questions answered. So let's get you involved. All right. We've got a lot of numbers to go through today, guys, because we have several trades that we've been kind of trading in perpetuity for a long time here, that we need to go back and basically run some numbers, see how these trades worked out. Not so much in terms of our long vertical trades, but in terms of diagonal trades. Those are the ones that we've kind of been extending for a period of time. All right, let's get going. Yeah, Ben is only about 35 years old, so I guess maybe I exaggerated how much market experience he had, but he was a child prodigy. You guys know that, right? All right, let's go through our disclosures and jump into our agenda. Options carry a high level of risk and are not suitable for all investors. What we talk about today is intended for information and educational purposes only. Don't consider it a recommendation. Schwab does not recommend the use of technical analysis as the sole means of investment research. You'll want to pair that with your fundamental analysis. We're going to be using the Paper Money software application. It's for educational purposes only. I think it's a fantastic tool to try out new strategies, test out new rules, things of that nature. There are some differences between the live and the paper accounts. We try to point those out to you. Past performance of any security or strategy does not guarantee future results or success. One thing Paper Money will not do is assign short options early. A live account can do that, so we like to make you aware of that. Now, somebody asked a quick question here about, or made a comment here about a class from yesterday, and somebody's having some follow-up questions on that. Yesterday, I did the Getting Started with Thinkorswim class and showed you how to use some scans and SpreadHacker. And so if that is something you're interested in, that was what the class was. So yeah, love to have you join that class. When you're a subscriber to our channels, it makes it so much easier for you to find our content if you're looking for something like that. When we have a moment, we will jump over there and take a look. All right, we've got some old positions to review, which we're going to spend some time on. In this particular class, I think the evaluation of the trades and talking about timing and what's going on, what decisions were made, are really critical to helping you understand what the strategy is about. So I do like to spend a fair amount of time there today, and we have a little bit of catching up work I mentioned that we need to do. So let's head over to Thinkorswim. And looks like our S&P is up still. We've got kind of some mixed markets. Let's see if our NASDAQ is holding on, our NDX. All right, another all-time high. Look at that, 28,852. The NASDAQ has been on quite a run. You guys know that. You've been watching it. Let's see, our Dow earlier was down. Let's see if it still is. Oh, it's just about even, minus 0.08%, not a big deal. Russell 2000, looks like it's pulling back a little bit, but it set a brand new high again yesterday. So when we're seeing all these bullish markets, sometimes people get a little bit concerned. They're like, well, how much further can it run? And the answer is, we just don't know, right? We don't know how much further it can run. And so we just want to be prepared. We want to be defensive with our positions. We want to lock in profits, things of that nature. Now, let's talk about a trade we did the last time I was here. Last time I was here, we did a long vertical on Abbott Labs. I think that was the right one. And let's kind of zoom in here. This is the day we got in. They had announced earnings. They had dropped based on whatever it was that they said. That's how the market reacted. And so we put in an order here for a long call vertical. And you know what? We got out a few short days later right here. We said, hey, if we get a majority of that profit, let's take the money and run. And so we did. Now, you can see maybe that trade could have extended a little bit further. Maybe we could have got a little bit more out of it. But essentially, we bought it for $1.03 and on the 16th, and then on the 22nd, it went ahead, it executed our order. We got out at 195. So let's grab our little calculator guy here. So 195 minus 1.03 is about $92 per contract. We had 19 contracts here with our position sizing. Times 100 there. So that added up to about a $1,700+ gain for a pretty short-term trade. The 16th through the 22nd is what that one ran. And that's one of the things we'll do in this class typically is we'll say, let's get out when we get a chunk of the money. We're not trying to milk the trade for all the trade is worth. We know the markets can go in some momentum patterns and some swings. And so we don't want to be incredibly greedy, but we do want to just kind of be efficient at trying to take profits when they're available to take. All right, so that is Abbott. Other trade we did last week or last time was Walmart. Let's go take a look at the Walmart chart here. And on Walmart, it is actually a trade that is still going on. Okay, let's just kind of zoom in and look at the date that we got in. And this one was a vertical, or diagonal rather, a long diagonal that we got into. I'll show you the information here. And so we got in here. The stock was not like moving around a whole lot. Okay, you can kind of see it's just kind of in maybe a pattern where maybe it's up a little bit, down a little bit, up a little bit, down a little bit. You can see our moving averages. Our blue is the blue line is 10 periods. The red line is a 30 period. Just kind of going a little bit sideways there. So not a lot of motion. So we thought, okay, with this one, why don't we do a diagonal trade? All right, let's go look at a couple things. Well, when we got in, our net debit was 501. All right. And we had sold the April 24 period. And then our long leg is this June 18th. And we still have that June 18th. Now you're seeing here, we're going 60 days back and you're seeing the trade history and you're thinking, I wonder what happened with that 127 call. Did it expire worthless or what happened to it? Well, if we come over here to our activity and positions and we come down to Walmart, we can see, yep, we're still long our 125 calls, but look down below. Down below with Walmart, we are short 300 shares at a strike price or trade price of 127. Okay. So this was one that ended up expiring in the money, that short leg. And so we are short 300 shares of stock here. Now, this part of the position, it looks like it's down a little bit right now. But as we look at Walmart, do we still want to be in a short position here? Do we want to be short 300 shares? Since we got into the trade, it looks like maybe we're starting to build some bullish activity, some bullish momentum here, because we can see our moving averages are going up. The price overall is kind of going up. So probably not really advantageous for us to be in a short position. So let's take care of that. Let's run some numbers. We're going to be a little bit at a loss on this trade for the moment. Okay. We're down 798. And we're going to subtract from that what our gain is so far on the long leg, which is 630. So we're down. No, that's not the right number. It's a much smaller number. That 789 minus 630. Okay, 159. So we're down about 160 bucks on it right now. Is that the end of the world? No, it's not. But we really don't want to continue this this trade here of being short the stock. So we're just going to go buy it back. All right. We're going to see here, we're going to create a closing order and we're just going to buy it back, whatever the current rate is right now. Let's see here. Let's get it rid of whatever this was with Apple. There we go. Here's the stock, our 300 shares. Let's go for the midpoint price, which is pretty close to the natural price because it's a very tight bid-ask spread. So that piece, we're out of it. Okay. However, we want to continue the trade. We are interested in selling against this longer dated call option. It's a 125 strike. See, it has some decent intrinsic or some decent, I'm going to say value now. It's moved nicely for us. Okay, so what should we do? We're going to sell another call. We're going to choose something that's a little out of the money. We could sell something for tomorrow, but that's pretty short. One of the things we do in this class frequently is we'll sell kind of like the next expiration Friday. So not this week, but the following week when we have those weeklies available is what we've been doing here. So let's go ahead. We'll open up our May 15s. And we want to go maybe something a little bit out of the money, typically. Well, let's see, 130 is our at the money strike price right now. So 131, 132, and so forth, these are going to be the ones that are out of the money. Now, many times we might go for a 40-something or a 30-something delta when we're selling those legs. Some of you might even be a little more comfortable way out of the money. Let's say a 25 delta. For our purposes here today, let's just go slightly out of the money. Let's go to the 131. It has a 41 delta. Do you remember what that delta represents? For every dollar that the stock moves, we expect this option to move 41 cents. Okay. Some people also use it a gauge for what's the likelihood of this expiring out of the money. And we actually have this column here as well, this probability of expiring out of the money. So this would be about maybe 59% likely to expire out of the money, which is ideally what we want for this because we're going to sell some premium here. We have 3 contracts. All right, so I'm going to select on the bid price here. We're going to sell 3 contracts. 125 is the natural price. We can get a little bit closer to our midpoint. Let's try our midpoint there at 132. And we were down, remember when I just did that calculation, we were down about 159. When we sell these 3 contracts and bring that money into the account, basically we're going to be sitting at a profitable position instead of an unprofitable position. Okay. Let's go ahead and let's send this guy in, and I'm going to put it in our dynamic diagonals and luscious long verticals class bucket. All right. And we got filled on it. Great. That's what we wanted to have happen. All right. Now we're going to continue to follow up on this trade because the idea with these diagonals is that we're selling premium against it, selling premium against that long leg continually. Each week, if we can sell some more, we're going to sell some more. All right. Let's see. Yeah, CB says, yeah, appreciate a review of our trades. Absolutely. We've got to do that in this class. Charles wants to know, will we go over the leaps options? Many times we're not typically selling out that far. Now, somebody could, if they wanted to, they could buy a really long dated option. We call those, the acronym is LEAPS, because they're, what is that first word? Equity, let's see, I forgot what the L stands for, but equity anticipation. I can't remember what that stands for. Basically, longer dated options. Can't believe I forgot that. So, we'd come out here, say the January 27s. We could even go out to June 27, December 20, year 2027, right? These are really longer dated. You could, in theory, and in practice, okay, you could buy a longer dated option and continue to sell premium against it time and time again, okay? Typically, we don't go out that far in this class, but you certainly could go out that far. Let's go. Somebody wants to know about the Dow long verticals trade. We're going to have to look that up. Let's go to our AMD trade though, okay? Yeah, CB's like, what's going on with AMD? All right, you could see it was still sitting here. Here's our AMD. We got into this trade a long time ago. We got into this March 12th. That seems like a long time ago. That was a couple of months ago. And on this, move out of the way here. I kind of wanted that to not be highlighted, but let's leave it alone. This long leg that we're still long that was acting kind of as a hedge leg for us and kind of the longer leg in this trade, we've sold a ton of options against it. Now, it is almost worthless right now. It is so far out of the money, but it still is our hedge leg. It's still protecting us. So we've wanted to keep it around. We wanted to use it. Let's go run through some numbers quickly on this one. There's a lot of numbers to review. Notice it still has 8 days left on it. And what we're going to do is I'm going to grab this little spreadsheet that we're going to use. We're going to come over to the account statement. We're going to bring up AMD. And I've gone back about 60 days because that covers us for the trade. And we started out, when we did that diagonal, we had a debit of 1240. Okay, going into it, a debit of 1240. Now I'm opening up the trade history here so we can see all the transactions that have gone on here. And what we're going to do, we're just going to do a quick little adding up. Make sure this is nothing with our class going on here. It's not. All right. 1240. Well, after 1240, we did, you're going to see in here, we're going to see diagonal, diagonal, diagonal. Most of these are diagonal rolls. Got a couple of single in here that we worked with, a couple of different singles, but let's kind of add in these numbers. We probably don't need that much of a column over here. Let's maybe just make it look a little pretty here. Okay, so the next time when we rolled, and you can see this is kind of like about every week. We keep selling, 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 rolling out, rolling out, rolling out. Get rid of whatever was short, close it up, sell the new one, bring in a credit. So let's go here. We're going to go 395. The next time we rolled, it was 334. The next time it rolled, it was 507. Now we can just kind of visually see maybe with these first 3 transactions, it has offset our initial net debit of 1240. Okay, great. After 507, let's see what happened here. This is where we get into some of our single legs. And on this particular one, we bought back the 210 put for 40 cents. So this wasn't cash in, this is going to be say cash out. So I'm going to put minus 0.40 cents here. The next one, the 227 put here, we brought in 5.55. And then it was, let's see here, 5.55. And then here was, let's see, our roll, 10th of April. Actually, that one just expired. And then we brought in 499. And then we brought in 368. I have to move this out here a little bit. 499, 3.68, and 695. Okay. Boom, da boom, da boom, da boom, da boom. Let's add it up. Okay. You don't have to do the sound effect with it. I do need to stretch the spreadsheet so I can get my little sum here. So on here, we've got 3313. We take the difference between 3313 and subtract out our initial net debit of 1240. That comes out to 2073. And on here, how many contracts were we doing? We were just doing one each time. This is a little bit of an expensive stock. And of course, it's been on a huge run. So multiply this times 100. All right. That's saying about 2073. Now that seems like a lot of work for 273. However, every time we did it, it was just one contract. Long-term equity anticipation securities is what LEAP stands for. Thank you, James. Yes, my brain kind of short-circuited on that one. Okay. So some of these diagonal trades, they take a lot of effort. You spend kind of a little bit of time on it, but hopefully you could see here, wow, we keep this longer dated one. Yeah, it's diminishing in value. It's not really worth a whole lot now, right? But the sum of all of that really pretty much overcomes. And this is kind of I'm going to say a non-traditional way to do a diagonal. Because typically if we're doing, say like a call diagonal, we're bullish. And if we're doing a put diagonal, we're bearish. And in this case, AMD just really took off. So we just held on to that hedge leg and kept selling puts against it, bringing in that premium. Now, you who've been trading along with this, you've been kind of keeping track. I hope you're getting a feel for that. Now, can we sell another one against it? We can. All right, we definitely can. Question here says, when rolling, do you monitor or when to optimize, or does it wash out? What we've been doing on AMD is we've been looking at it weekly. We've been typically rolling weekly. As you can see in those dates, right? You can see it's about every week. Sometimes I'll do it in class, but where sometimes I was like, oh, it's time to do it now. Maybe it was Tuesday. We don't meet till Thursday. And I'm like, gee, we can go buy that back for 4 cents. Let's go do it. Let's roll again. And then I'd kind of tell you about it. So a lot of it is based on watching what the value is of that short option. And gee, it's good to buy back now? Yeah, I guess it is good to buy that one back now. Let's go ahead and roll. Let's sell another one. Okay. So it's not just because it's a Thursday that we're looking at it. It's because it's the right time to examine it and see if it's time to roll. All right. Let's see what other questions were on here. Okay, just about what are the considerations when rolling. Rad Hag 2 is new. We're glad to have you in here. Happy to see you here. This is a little bit more of an advanced trade, these diagonals. They certainly are. You know, implied volatility, when the price of a stock goes up, a lot of times that implied volatility is dropping. We've got a question here about implied volatility. Let's just go pull it up here, implied volatility. Come on over. We'll just look at it here. Typically it drops. Now, when implied volatility drops, what happens? Well, that part of the option premium that's associated with implied volatility, if the implied volatility drops, that area drops. If the implied volatility goes up, then typically that will go up. In this case, because the stock has been so incredibly bullish, we're just seeing implied volatility really drop out of it here recently. But you can see through this period of time, it was actually going up through that period of time. It was such a big move, though, that the implied volatility increases didn't really hurt us that much with those short put options. Okay. You would like to see Thinkorswim again. I think what you're saying is you want to go back to this screen here. on AMD. Is that the one you want me to go back to here? Hopefully, Ted, that's the one that you're looking at. All right. Any other questions? Joe's Wasta, welcome to our class here as well. You know, happy to see those of you that are new come along. Those of you that have been in our class week after week, always appreciate you being here as well. Okay, we're going to sell on AMD because we can. We're going to go out and sell against our current, basically the one that has 8 more days before it expires, which is next Friday. Stock is at 412. I know it had that huge move this week, didn't it? And so maybe something a little bit out of the money that might just kind of, okay, going a little bit more sideways today after yesterday's big move. What if we were to come out here to say 425? That would still be a ways out of the money. It's going to be around a 40-ish delta, which you'll have to see where you're comfortable with the deltas. Some of you might be more comfortable out here in the 30 deltas, but we've only got a few days left on this one. So we're going to go ahead. We're going to sell the 425 here. We're going to bring in 1050. Okay. We're going to bring in 1050 of premium. We're going to watch this week and see how it does. If it starts to decline in value and gets to a point that we're like, let's buy it back and totally be done with this trade. Or if it looks like we can milk it for a while. If this stock kind of goes sideways for a bit, does not make a move up there towards the 425, that'll allow our time decay to help working in our favor. So that's what our plan is going to be there. Okay, and we'll get one last roll off of AMD. Okay, hopefully you saw that. Going back to that screen, put it there for a minute if you need to take any other notes. Perfect. All right, next up, let's get some new trades on the board here. Let's get going with a few things here. We've got our Walmart trade still working. We've got that AMD trade still working. We've taken some action with both of those trades here today, and I show you what happened with Abbott Labs. Made a nice move for us, cashed us out. We're happy campers, right? Let's take a look at a new trade here. And what I want to look at is Microsoft. And let's maybe kind of come out here a little bit, kind of see what's been going on with Microsoft. Apparently, after a little bit of a run, they apparently disappointed a bit with their earnings. And so it dropped down, and it just kind of is going a little bit sideways here. But it's definitely off these lows. It started a little bit of an uptrend here. So we are going to put on another diagonal. We're going to buy a longer dated option. We're going to go out to July for this one. And then we're going to do a similar thing like what we were doing with AMD, where we're going to sell calls against it. Okay, so we're going to buy a longer dated call, sell a call against it. And because it has those weeklies, did that not go in? Did I not hit confirm and send? I might not have hit confirm and send. Let's go for the midpoint price here. And let's put it in this bucket. Send it off. All right, now let's set up our Microsoft trade. So Microsoft has those weeklies, and it has even a little bit more than weekly. It has Monday, Wednesday, Friday expirations. If somebody wanted to be super, super active, and I mean super active, you could, today we could sell the one for Monday. We could sell the one for Friday as well, tomorrow, or we could sell Monday or Wednesday or Friday. Just because of how it fits in with our class time, I typically have been selling the Friday ones. But if you wanted to be like super active, you don't have to go out that far. You could use some of these other weeklies. So to start our diagonal, we are going to sell the one that's 8 days out. And right now the stock's at about, 425 is going to be our at the money strike price. Okay, so what is something that's maybe going to be a little bit out of the money at this point? Might be something like, let's go for this 40 delta here again. Let's go for the 430 strike price as far as our leg that we're selling. Looks like we can get in the neighborhood of $5 for it. And so what I'm going to do is I'm just going to put my mouse in this area. I'm going to do a right click and I'm going to say buy diagonal. And when I do it, it knows with this first option here, that's the one we're going to sell and go short. But it doesn't know how far we want to go out. It doesn't know if we want to go out to the next one in the series, which is May 18. So it just throws on whatever is next. But like I said, we're going to come out here to July 17th. So let's go ahead and come out here to July 17th. And then we need to pick a strike price here. This is going to be the long leg that we are hoping to sell premium against to continually lower the net debit and hopefully come out positive on it. And so on this one, we're going to maybe go out a little bit from go a little bit further out of the money. Although if you wanted to, some people might stick at the money. Okay, or at the money in this case is going to be that 425. So you can decide. Okay, let's maybe just go out here to say, I said let's go a little bit out of the money. Let's come out here to 435 as our long leg. And so that's going to be, instead of 432.50, 435. That's what we're going to do on that. So instead of it being a $16, $17 contract, we sell that initial $5-ish of credit from that front week, the one that'll expire next Friday. No, lowers our net debit significantly. And what we're going to do is, if we're going to hope Microsoft just kind of creeps up really kind of in a short little spurts. It's not really moving a lot right now. And as it continues to climb, that longer leg should gain some value. And then we're hoping to allow the one that we sell, the short one that has high meltage rate, right? The theta value on it typically is higher because it's getting closer to options expiration. And we're going to put that on. Nepal, let's just check our questions here. You want to get a link to my workspace? You know, my workspace is not all that fancy, but I can do that for you. And then the CB says, what put would we sell? I think we answered your question there on AMD. Hopefully we got that there, CB. Jane says, I thought you held a put that you were selling against on AMD. That is right. On AMD, that's what we did. So on CB, we have a long put on AMD and not a call. Oh, are you saying did I throw in a call here? Let's go ahead and process Microsoft, okay? Let's go ahead, let's send it to our bucket here where we're keeping track. And let me come out here and see what filled. There's our Microsoft, here's our AMD. You guys are correct. You are correct. I thought I put a put in there, and then I thought I sent it on, but I'm seeing it did not get filled, nor is it working. So when you make a mistake, what do? You go correct it as soon as you notice, okay? So we're going to go buy back this 425 column. We're going to go sell a put like what I meant to do. So let's do this. Here is our AMD 425 call. Saying it's about 1090. Let's get the midpoint price. Let's see. That's kind of going to be a little bit of a wash, maybe a a tiny bit of a loss there. We got filled at 1035. We're not selling it quite for 1035. We're going to sell it. Well, we might, in our mistake, we might actually make a little money, but there it goes. That got filled. Okay. Let's go back to AMD. Let's go back to this coming options expiration where we have our longer dated put that's way out of the money. We can't even see it here. And let's go a little bit out of the money. I said a 40-ish delta is what I was looking for. So really this needs to be like we'll do the 405 here. That's the closest to the 40 delta. If you wanted to be more conservative, you wanted to be a little bit more out of the money. And some people are much more comfortable being at a 30-something delta or a 20-something delta. You've got plenty of choices here. Okay, we'll go 405 on this one. Maybe collect a little bit of premium. Let's take our midpoint here and put it in our bucket. And there we go. I appreciate you guys catching me on that. On that AMD, hopefully that'll get filled here pretty quickly. So the max loss on the Microsoft trade is whatever our net debit is. And our net debit looks like we ended up here at 1165. Okay, so that's going to be our initial net debit. That long leg, the July leg, $17 and change. So $1,700 per contract. We're just going to do one on that one. All right. So the question is here, what's the max loss on the Microsoft trade? Well, the max loss right now is whatever that net debit is. Okay. So in our case on this trade, 1165. Okay. All right. Next up, let's put on here. What's Apple doing? You know, sometimes you're like, oh, it's always the same stocks that keep coming up. Sometimes that's the case. Apple kind of has been in somewhat of a sideways pattern until their most recent earnings. The market liked what they had to say, it gapped up, and it's been continuing to run here. Now, the one thing that I'm noticing is that it looks like today maybe it's breaking out against this 287 resistance area. Now, it's early in the day, so we don't have a ton of volume on that yet to really say, gee, is it a real big breakout or not? But what I'm noticing are these moving averages are headed up. And so this might be more appropriate to do a long vertical with. If somebody was not expecting a lot of movement, sure, you might consider doing a diagonal on it as well. We're going to do a long haul vertical. So we're going to set that up. And we've got a lot of time frames to choose from. And with Apple, okay, there goes our AMD short put. On Apple, the nice thing is that usually there's a lot of liquidity. You can come out to some of these weeklies and you're like, look at this, look at all these calls out here on a June 5 option, which is nice to see as a trader, right? That liquidity is so important. On this one, let's see, many times we'll start with our at the money strike price, depending on how aggressive we want to be or conservative. Somebody wants to be a little bit more conservative, you might start in the money. We're going to do at the money. We're going to start at 290 here. And we might go say 290 by 300 here. I'm going to spread it out a little bit. So let's go ahead and say buy vertical. And let's come out here to, let's see here, 295. How far did I want to go out? I wanted to go out to 300, didn't I? Let's change that to 300. So we're going to have a $10 wide spread. So we're going to risk 415 to make essentially 685. Now the stock's got to move. In this case, we want it to go beyond 300, which is up here. I mean, so that is a little ways out. If somebody wanted to be a little bit more conservative, you might do a $5 wide spread rather than a $10 wide spread. We've got about a month's worth of time, so we're going to go with the one that's a little bit more aggressive. looking to bring in a decent amount. Now in this class, typically we'll allow ourselves to risk $2,000 per trade. So how many contracts could we do here? For risking, so we'll go 2,000 and we'll divide it by, let's just do the 410. I think that basically equals 4 contracts. Okay, we can't do 5 contracts. We're going to do 4 contracts. Oops, there's our 4 contracts. That'll keep us a little bit below 2,000 on our max theoretical loss. And let's put in an OCO order here. Okay, we're going to create 2 opposite orders. And we're going to put in what if we're right, what if we're wrong. Okay, so what if we're right and we get 610? What does that going to end up being? Actually 690 was going to be 680, but 690, 690, 590. It's going to be 590. Okay, 590 is our max theoretical gain. So what if we get, come back, little calculator guy. All right, we get, say, 5.9 times, what if we get 60%? Would you guys be happy with 60% of that? Let's say times 0.6 is going to be 354. We're going to add that to 410. We're going to say, go buy us back at 764. We got bought out there. We're going to be happy, and happy as a clam. And on this side, let's do it if we're wrong. What if we get down to say about 50% of this? So let's go $2.05 here. If we get down about 50%, it probably is not going our way. We probably want to close out of the trade, live to trade another day. So we'll make that good till canceled, that good till canceled. And we're going to go ahead. I don't think this has changed too much. Let's just go ahead and hit confirm and send. Put it in our class account, send that example trade over. Let's see, question here from John. Can you show this Apple trade in the analyze and walk through it? We'll take a quick look. We can take a quick look at that. My time is almost up. It doesn't look like it filled yet. But say we come over here. Oh, good, it just got filled. Uh-oh, do you know what I did? I made a mistake. We can't go to the Analyze tab. I've got to fix my mistake. I meant to change that to a stop and I left it at a limit. Erg. Okay, we're going to have to come back here. We're going to create a, usually it'll give me a duplicate order. I apologize. That is totally my goof. Let's do this one more time. Create opposite order, create opposite order. This one that I put at 205, I should have put at a stop and I neglected that. That will trigger a market price. And then I think this was was it 764? Yeah, 764. All right. You know, sometimes it pays to just slow down and read the order before you put it all the way in, which I didn't do that first time, but now we've got it good. Let's go ahead. Let's send this off to our bucket. You have to have the same time in force. Well, they're both GTCs. We'll make this a GTC, but it shouldn't need that to go in. Okay, shouldn't need that. Mine's being a little weird. We'll just go ahead and get that submitted. All right, now we got filled. Now we got our order. We've got our OCO target there. I apologize, we're not going to have time to take that one to the Analyze tab, but that is something I like to do sometimes, is to show you on the Analyze tab. Next week, when we come back, we'll do that. We'll look at it on the Analyze tab, or the risk profile rather, and kind of see what the numbers look like a week into the trade. Okay, so we will do that then. You guys, appreciate your viewership here today. Appreciate your participation. Appreciate you checking me out on my math. Yes, it's a little too early in the morning for me sometimes. In any case, follow us. It makes it so much easier to find our webcasts when you have become a subscriber to our Trader Talks channel. You see, coming up next is going to be Brent Moores with investing in dividend stocks. After that, trading the trend with James Boyd. You can find our playlist. Just makes it really easy to find our content. Give Ben and I a follow on X, Ben Watson CS, Connie Hill CS. And if this was helpful to you today, go ahead, hit the like button on your way out. We'll see you at the top of the hour with investing in dividend stocks. Bye-bye.